Market news now. Asian shares traded mostly higher even as the Bank of Japan announced no change to its yield curve control policy. The Bank of Japan maintained ultra-low interest rates, including a bond yield cap it was struggling to defend, defying market expectations it would phase out its massive stimulus program amid mounting inflationary pressure. Meanwhile, locally, retail group Steinhoff has raised about 5.8 billion rand after selling some of its shares in its European discount retailer Pepco to cut its debt. Shares in Steinhoff rose as much as 8.2% after the result of the book build, before paring gains to 6.1% at midday. Steinhoff has been looking to reduce debt and financing costs following a 2017 accounting scandal that prompted about 90 separate legal claims against it. To talk to us about the latest when it comes to the markets, we are joined by Chantal Marx from FNB Wealth and Investment. Chantal, thank you so much for your time. Your sense of the market sentiment right now as we really get into the swing of things for 2023?
I think sentiment's at a knife's edge at the moment, to be honest, because we've had a very, very strong start to the year. And then right now, it's kind of trepidatious. So when we are seeing moves higher, it's only slightly. When we are seeing moves lower, it's only slightly. And this is something that is taking place globally as well as on the JSE. And I think the market is now thinking, is this rally sustainable? Or the fact that inflation is quite high, interest rates globally are probably still going to increase. There are still murmurings around a recession in some of the world's largest economies. Perhaps it's been a little bit too much too soon.
Speaking of too much too soon, I mean, one of the questions I've been asking a whole host of the analysts, at least over the past couple of months, is the dollar performance. And should we then think that, US dollar peak has arrived?
So I wouldn't hold my breath, because the dollar has weakened quite a bit, but the Fed is still going to be hiking interest rates, at least at the next two meetings. And if inflation doesn't rein in meaningfully, we've seen it come down, but still well above that 2% target level for the Fed, we could still see continued hawkish rhetoric or new hawkish rhetoric or renewed hawkish rhetoric coming through from Fed and Fed officials. And that, I think, will have the opposite impact on the dollar. Also, if we are going to get into a recession scenario, then you could also expect the dollar to strengthen. So I think that I would be a little bit cautious at this point to get too enthusiastic about a stronger rand or a very weak dollar.
So late yesterday afternoon on SENS, we got news that Brett Botton will be stepping down as the CEO of SPAR. And probably at least over the past couple of months, there have been media reports surrounding SPAR on the back of two fictitious loans and, accounting processes that weren't necessarily, I guess, not particularly kosher, for lack of a better description. But let's talk about SPAR as a retailer versus its peers. What do you make of its performance?
So SPAR has really been struggling relative to the rest of the retailers. What's important to remember about SPAR is it is a wholesaler as opposed to a pure retailer. That means that they are actually selling goods into SPAR stores that do not necessarily belong to them. So when it comes to shifting strategy or responding to competition, they're a lot slower to do so. And I think one of the things that has happened over the last year that SPAR, actually since the pandemic era that SPAR has been very slow to respond to, has been the rise of online sales. So I know that they are trialing an online sales platform or a quick delivery on-demand platform currently, but they've been very slow to come to the party, which means they're slightly behind the curve. That is just the South African scenario. They also have businesses offshore. Now, in Ireland, they're performing quite well. The convenience angle is working out for them, but they have been under a lot of pressure in their newest market that they've entered, Poland, where some of the franchise owners have actually decided to leave the SPAR group in its entirety because of a dispute with the new management team. So I think there's just a lot for them, particularly relative to competitors like ShopRite, that just seem to be ticking along nicely. They've invested in their IT. Their on-demand shopping platform is absolutely excellent. It's a difficult one for them at the moment.
So let's stay with companies. Your expectations for this season's earnings when it comes to the US?
So I think it's going to be a tough earnings season, but the market is already expecting that as well. So if you look at expectations for this earnings season, a decline in earnings overall is anticipated from US companies. But we need to ask ourselves whether or not that is now priced in by the market and whether or not that decline is actually going to materialize. So far, we have had mostly the financial sector reporting results, and it's been kind of mixed. I think on balance, it's probably been slightly better than expected, but it is pointing to a more strained environment currently. I think the proof in the pudding will probably be the technology stocks and once they start reporting.
And I was going to ask you on that, with some of these tech companies retrenching and cutting, expenses, what are you going to be paying attention to, at least for 2023, when it comes to those tech stocks?
I think the outlook statements are going to be very important, as well as the plans that they devise in order to kind of get demand back on track. I think it's going to be a lot less difficult for hardware guys like Apple, for example, also earning a lot of annuity income, than it will be for the likes of companies exposed to advertising in a space where we are likely going to see a continued economic slowdown. So I think that the plans that they make in order to respond to some of the issues that they're facing are going to be very important. And then I really do think that the economic growth outlook is going to have a big impact on the likes of a Google or a Meta, because they're so exposed to advertising.
Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks from F&B Wealth and Investment, giving us her perspective when it comes to the markets. And of course, as earnings season continues to pick up steam, we will unpack some of the major companies, the likes of Netflix, for instance, that are releasing their results. That is it for me. We're going to take a quick break. When we come back, we'll have more news with Nompumelelo Siziba. Stay tuned.